Welcome to World Insight. Please subscribe and hit the bell icon for more breaking updates. In a bold move to maintain its technological edge, Washington restricted China's access to advanced semiconductors, aiming to stall Beijing's progress in AI, supercomputing, and military tech. The strategy was clear: cut off the supply of critical chips like NVIDIA's A100 and H100, and slow China's rise as a tech superpower. This marked a shift from decades of economic integration to open strategic competition. The U.S. now saw China's tech ambitions as a direct threat to national security, fearing Beijing would use AI for military and economic dominance. The export controls were a calculated chokehold, betting that China couldn't innovate its way out. Initially, the sanctions sent shockwaves through global supply chains and hit American companies like NVIDIA hard, costing billions in lost revenue. But the policy underestimated China's resolve. Instead of crippling China's tech sector, the sanctions ignited a national drive for self-sufficiency. What was meant to secure America's lead instead set the stage for its toughest challenge yet. The era of unfettered technological exchange was over. Washington's gambit would soon face an unexpected and formidable response. The chip war had truly begun. Rather than capitulate, China launched a massive state-driven campaign to build its own chip industry. The U.S. sanctions gave Beijing the perfect excuse to pour unprecedented resources into semiconductors. By 2024, China's chip industry revenue soared to $201 billion, and self-sufficiency jumped from 13.5% in 2013 to 50% in just over a decade. China didn't just copy Western tech, it built capabilities across the entire value chain, from design to manufacturing. SMIC became the world's fourth-largest foundry, and JCET the third-largest chip assembly provider. The sanctions didn't break China's tech sector, they remade it. Forced to innovate, Chinese firms built a resilient, self-contained ecosystem. The short-term pain of the blockade gave way to long-term gain, a hardened, more independent industry. The U.S. tried to slow a rival, but instead created a more formidable competitor. The dragon was awake and building its own technological arsenal. The global balance of power was shifting. Huawei, once battered by U.S. sanctions, became the symbol of China's tech resilience. Instead of folding, it developed the Ascend 910C chip, manufactured by SMIC using a 7nm process, a major leap for China. While not as advanced as TSMC's latest, the Ascend 910C outperformed NVIDIA's downgraded H20 in key AI tasks. This wasn't just about hardware. China's chip design sector boomed, with HiSilicon ranking 6th globally by 2023. By 2027, over half of China's AI chips are projected to be domestically produced, a dramatic reversal from U.S. dominance. Huawei's success proved China could innovate under pressure, building both chips and the supply chains to support them. The Ascend 910C became a declaration of independence from Western tech. Washington's blockade was not just endured, it was outflanked. The chip war's front lines had shifted. Blocked from the world's most advanced chips, China pivoted to a new strategy scale. Instead of chasing the tiniest transistors, Beijing clustered vast numbers of homegrown chips to achieve high performance. The Huawei Cloud Matrix 384 system, linking hundreds of Ascend 910C chips, matched some of NVIDIA's best offerings. China focused on system-level innovation, fast interconnects, optimized software, to make the whole greater than the sum of its parts. This brute force approach required massive energy. But China's investments in renewables and nuclear made it feasible. Local governments subsidized electricity for data centers using domestic chips, further boosting adoption. While software immaturity remains a hurdle, China is betting it can solve these issues faster than it can catch up in chip manufacturing. The West perfects individual chips. China builds colossal engines of computation. It's a pragmatic, if less elegant path to AI supremacy. Scale, not sophistication, is China's answer to the chip blockade. By mid-2025, Washington realized its chip blockade had backfired. Instead of crippling China, the policy fueled a thriving domestic industry and cost U.S. firms billions. The U.S. shifted to managed competition, allowing limited exports of NVIDIA's H20 chips to China. An admission that total decoupling was unworkable. The new goal: keep China partially dependent on U.S. tech, maintaining leverage. A 15% revenue sharing requirement was introduced to fund America's own chip initiatives. But trust was broken. Beijing now saw any reliance on U.S. tech as a security risk. Chinese firms bought H20 chips for short-term needs, but the long-term focus was clear: self-reliance. China's regulators pushed back, pressuring domestic giants to prioritize homegrown chips and questioning U.S. products for security risks. The U.S. tried to regain leverage, but China was playing a long game. Engagement would continue, but on China's terms. The march toward technological sovereignty was now unstoppable. The chip war had entered a new phase. The chip war has split the world into two incompatible tech ecosystems. The US-led bloc with Nvidia, AMD and Intel dominates North America, Europe and allies, pushing the frontiers of performance. Meanwhile, China's ecosystem, anchored by Huawei, SMIC, and rising startups, spreads across the developing world. For many in the global south, China's tech stack offers a cheaper, less politically fraught alternative. This bifurcation means duplicated supply chains, higher costs, and less efficiency. Companies must now navigate two sets of standards and platforms. The dream of universal interoperability is fading, replaced by digital walls and technological islands. For consumers and researchers, this means fewer choices and fractured collaboration. The chip war has triggered a global technological divergence with far-reaching consequences. We are all living in the shadow of this great bifurcation. The chip war is a lesson in unintended consequences. Washington's attempt to contain China instead created a formidable rival and fractured the global order. The world now faces a deep, enduring technological divide. The U.S. must shift from containment to fierce competition, investing in innovation and strengthening alliances. But it must also accept that a large part of the world will adopt Chinese tech. China, for its part, still faces hurdles, lagging manufacturing and immature software. Its long-term success depends on overcoming these weaknesses and proving its tech is globally competitive. This new era will reshape globalization, international relations, and the future of AI. The race could drive innovation, or deepen global divisions. The contest for technological supremacy has just begun, and its outcome will define the 21st century.